So I think you've got to sort of look at it as two halves for 2025.
Yeah.
The first half is going to be the same as 2024 in terms of US exceptionalism. You are going to get some policy announcements from the new Trump administration in the second half of January, which will help market sentiment. And so the market can probably sort of reach 6,200, 6,300 for the S&P 500 in the first half of the year. So it's that same sort of dominant story. I think the problem is that the second half is going to be a lot trickier, a lot more difficult, because the thing that the Trump administration will do is likely expand the size of the budget deficit, and that points to bond yields, 10-year bond yields, eventually going to 5%.
Okay.
And that's actually, it's just too tough for the equity market at current valuations in the US.
Brilliant. Well, look, you have the honour, or the kind of the eye-rolling dubious honour, of you're the first person I'll challenge of 2025, and you've had plenty of those over the years, also, so you know what's coming next. It's like, if everybody thinks that it's like you, and I think there's a lot of people who think that the S&P is going to go north of 6,000, that things are as they were, and then we get trickier in the second half of the year. Why is the market not going to act as a forward-looking indicator, stroke instrument, and actually do all of that doom and gloom in the first half of the year?
Because I think we get some Fed easing, first of all, that helps kind of keep the sentiment positive. I think, secondly, the bond market will react to when supply is coming, rather than the tax cuts, which will be sort of announced in the first half of the year. You've also got, Bessent, the incoming US Treasury Secretary, that's claiming that he wants to get the budget deficit down to 3%. In reality,
do you believe that? With respect to Mr. Bessent, and to respect to Doge, Ramaswamy, and Musk, and I don't believe a word of it. I don't believe a word of the US going back to a 3% deficit. I didn't believe it under the Democrats, and I don't believe it under the Republicans.
I would agree with what you're saying. However, in the first half of the year, there'll be some hope that maybe they can stabilise the budget deficit. 3% is very, very ambitious. The reality, however, by the second half is likely that we'll be facing an 8% budget deficit in 2026, and an increase in US government bonds being issued. And really, at the end of the day, that's going to push bond yields higher, and it's going to be the driving force for all markets.
Yeah. Why do you believe that the Fed can still... Here you go. I've got a guest on later, Thanos Papasavas, 8 o'clock London time. And he's kind of stuck in some ideas. He likes to be a little bit contrarian here and there. And I don't think he's that contrarian that he actually thinks the Fed could be hiking rates in 2025. It's not a million miles away from where the market's come from. The market's had a sobering end of 2024 where the Fed's not been quite as acquiescent as it hoped it would be. Now, I don't know what the chance of the number of cuts this year is. It's down to about 30 basis points, I think, rather than the previous 50 plus. Could the Fed be hiking in 2025?
We actually think it's more 2026 that they will actually hike, because the tariffs and tax cuts that the Trump administration introduces will boost inflation going into 2026, and then the Fed will...
So the dot plot's wrong. The dot plot, which says we're going to get to I think off the top of my head, 3.125 in 2027, it's wrong.
Well, we think that you are going to see some further easing, then you're going to see sort of tightening. The reason you see some further easing is there's still some lagged effects from high rates kicking through, because people are coming through, refinancing, and that sort of is a little bit of a headwind to the economy, enough that the Fed, as Powell said, they don't want to see any further softening in the labour market. And that then means that we are going to get 2 cuts, we think, delivered in the first half of the year. So that's why there's a contrasting story that we see in the first half versus the second half. Bullish for the US equities, and then we've got a correction coming in the second half of the year.